Hello, it's Paul Scott here on Thursday the 11th of June 2015. Really good day for me today, really good week actually, with some of my big positions reporting this week and reporting positively. Today's small cap value report, I've only covered one share so far, which is one of my favourite stocks, Avesco, AVS. It's an equipment hire business for outdoor events, particularly audio-visual equipment and studio equipment and so on. Really nice business, really nice turnaround situation this, and the shares are up 27% today, which is great, and I think they could have further to run, but I've explained why in today's written report. Apologies, there weren't any other shares for me to write about today. I'm running very short on time as I've been in Islington for the last week and I've got to get back to Hove today, so I have to cycle across London down to Victoria and jump on a train, so there isn't time to really do much more today. So I thought I'd fill in the gaps with the video. So this is very interesting. This Avesco, the chairman, who owns 29.99%, has sold 540,000 shares at £1.75, and you think, oh dear, well, fair enough, he's of retirement age, not unreasonable, he wants to reduce. But look at this. Look who's bought the shares. All of them have been bought by senior executives of the company. I think that's fantastically bullish, so I just really wanted to sort of reinforce that point. It's thinly traded anyway, and that when a big block of shares come up from the chairman, the other directors buy the lot. I think that's great news. What's that telling you? It's telling you that the directors think there's a lot more upside to come. So I think this is a very, very bullish point. Right, I've looked at CareTech Holdings, CTH. This is a provider of social care facilities, so it's a big sort of asset base of fixed assets and quite a lot of debt. It looks, at least superficially, I mean, I haven't looked into it in any great detail, but I think Simon Thompson of Investors Chronicle flagged this one recently. I like his stuff, most of it's pretty good. It's a good place to start anyway for ideas. Now, obviously the forward PE here is the attractive thing, 7.6, and a good dividend yield as well, which suggests that the earnings are real. The only issue I've got with this is 146 million market cap, 315 enterprise value, so the difference of what about 165 million is net debt. So quite a bit of debt, but quite a bit of fixed assets too. My only problem with this is that they are providing specialist social care to local authorities. Now, remember what happened with what were they called? Southern Cross Healthcare that did care homes. I mean, they went bust when the local authorities squeezed the fees that they were prepared to pay. So that's my big worry with this one. The figures look great today. Strong operating cash flow. EBITDA's up a bit. Well, don't look great, I suppose. They look good. Underlying profit before tax increased 11%, and these are only 6-month figures, remember, interim figures. The dividends up 8%, so good solid figures. Worth a look if you can satisfy yourself with this issue over potential squeezing of the revenues if the local authorities just decide they're just not prepared to pay these guys what they've traditionally paid. So worth a look, that one. CareTech, I don't hold any personally. What am I going to look at today? Now, Volex. This is a stock I've known for years and have held previously, but I got disillusioned with it a while ago when the turnaround plan really didn't seem to be delivering the results it was supposed to have done. Now, the figures today, frankly, are not really impressive. Turnover's up a bit. They report in US dollars. This is a full year figure. Look at that profit margin, 8.8 million underlying. It's only a 2%, less than, just over 2% operating margin, and that's on the underlying basis when they will have, massaged out all the inconvenient numbers. So that's very much putting your best foot forward, and they make virtually nothing on that basis, and there's a statutory loss. I just don't think this thing's going anywhere. I mean, it's marginally net cash now after having done a rights issue a while back, after they said they didn't need to do one, when they patently did need to do one. So big question mark over management credibility here, though I think the CEO was changed. The balance sheet's not great even now. Outlook comments are not particularly stimulating. They provide electrical power cords. I mean, they're saying here, undergone significant change, positive impact on our results, well, only marginally, thanks to our blah blah blah. Differentiate itself from the competition. Can it? If it's making a 2% margin, can it really differentiate itself from the competition? I don't think so. I think they're just in a very, very competitive marketplace of making commodity products. Growth slowed in the second half of the financial year. We expect markets in which we operate to continue to be competitive. There you go. I just don't think it's really going anywhere in particular, unless they can start making higher margin products. There was a talk about them doing optical connectors a while ago. I don't know, there might be some more about that in the narrative today. I haven't looked. I just think it's a very weak and not convincing turnaround story. Here they've done a 3-year set of figures, so 2013, 14, 15 comparisons, which is helpful. Underlying operating profit, $12.3 million, $4.5 million, and $8.8 million. So it's doubled its underlying profit from last year, but it's only gone from 1.1% to 2.1%. I just think there'll be more restructuring, and I don't think it'll ever get back to the profits it made in the past. If you look at it's got an 82 stock rank though, so the Stockopedia computers quite like it. 75 million market cap in sterling, remember, and they report in dollars. Forward PE of 11, no divvies. I think this rise here in share price, frankly, was quite spurious. I think you're getting quite a few spurious share price rises in small caps at the moment. Things start to go up, then everyone thinks, oh, it's going up, let's buy some. And they take it up and take it up. Oh, it's great, the chart looks great. Oh, then you get the numbers. Not so good. So that's a pattern I'm seeing a lot of at the moment. Here you see the dividends. They brought a dividend back in 2011, small one. Tried to create an upward trend, then had to abandon it again. So, I mean, I just don't think it's a very good business, this. If you look back, and I think it's dropped off now, because we only go back to 2009 here, which I'd like, I think Ed's looking at adding a button so you can look further back. Pre-credit crunch, this thing was very profitable, but I think it was making money on some big contracts with Apple, which probably won't be repeatable. So I don't think much of Volex. I'm not interested in revisiting that one. Mulberry, the fashionable, very expensive handbags company. The only reason I'm flagging this is to just show the severe impact when you get your fashions wrong. Revenue down 9%, adjusted profit before tax down 17.4 to 4.5 million. Bit of a disaster really, but I think it was expected. It was look at that, adjusted earnings per share have collapsed really, down 90% almost. They've maintained the divvy, and I see they've changed their creative staff. Is this it's a full year figures. Here you go, a new chief executive, new creative director recently. I think it's still quite expensive. The Outlook comments were quite good on that one, so it looks like they are regaining. I do not understand why some women spend so much money on a handbag. I mean, it's just a bag. Why can't they do what men do and just use a Sainsbury's plastic bag? That's what I always do. Anyway, 543 million market cap, forward PE of 170. Well, yeah. Pathetic dividend yield. This is a bet on them getting back into the sweet spot in terms of fashionability, isn't it? It's not for me. I'm surprised the shares are where they are. Anyway, Mulberry, so we'll kill that one. Now this is an interesting one, totally speculative, so not the sort of thing I would put in the written report, because I like to look at other things sometimes in this section. Now they've said here, a major advance in scalable graphene production. I've googled graphene, and it's some incredibly strong, incredibly thin film or something. Now they're saying here that 2D Tech, which is a recently acquired tiny business connected to Manchester University, has well, they're saying there's a major advance that they've made here, and that it's in a technique to produce graphene sheets. Total punt for me. I did buy a few first thing this morning because I had some spare money sloshing about after the results from Avesco, so I've just had a bit of a punt on this. Here we are. I'd be interested in readers' and listeners' views on this one, because, as I say, not really my thing at all. But I looked back and saw that they'd done a placing last year at 26p, raised about 5 million quid in fresh cash, and it's only capitalised at 15.5 million. The stock rank's terrible, as you would expect, because it's a very speculative thing, but it's up strongly today on not particularly big volume. I've done a very superficial look at it, and it does have a proper business that makes a tiny profit, I believe, and then a couple of blue sky things as well. So I'm not suggesting it's a good stock. I'm just saying it's an interesting looking RNS this morning, and for people who like sort of high risk, more speculative things, have a look at it and come back to me and let me know what you think, because I'm interested in other people's views more than pushing my own view on this one. Oh, that was just the details of the 5.5 million placing last year. I think these speculative things, I don't mind touching them if they're cashed up. If they've got plenty of cash in the bank and the cash burn isn't particularly great, which it isn't on this, then I don't mind having a bit of a flutter if the market is in bullish mode, and I think we're getting into one of those periods at the moment where the market is bullish. I saw that this Gate Ventures thing has gone up again, and now this is a really bizarre situation. Wow, it's up to 3 quid. There's nothing there. There's nothing of any significant value in this company, and it's just going up and up and up on the basis of a short squeeze. And I think this is what's stock rank of 0. I think this is what's fundamentally wrong with AIM, in that company, and Lucy Mears flagged this point at the UK Investor Show earlier this year. AIM has no requirement for a minimum free float, so the result of that is that you can have absolute junk with no value listed, and the price can then just be manipulated up to any level, and I think that's what's happening here. People make the mistake of shorting stocks like this, and of course if there's no free float, you could lose your shirt. It's gone up to 3 quid, it could go up to 30 quid. You just don't know. So personally, I never short micro caps. I only ever short the larger things, where you don't get this risk of the stock just spuriously rising from 15p to £3, as this one has. Okay, I think I will leave it there for today. Oh, Triad is another thing. I had a quick look at their results, but they're too small for me, but might be worth readers having a look at. And the other one I looked at was Red Hall, but I think that's a bit of a disaster area, so I'm not going to look at that one on the video. Okay, got to sign off. I've got a train to catch, so see you tomorrow. Bye.